Good evening, Noah. How you been?
Doing well.
Good, good. It's good to see you since our last meeting. We just wanted to reconvene and kind of go over the 5-week earnings that have been progressing since we last met, and we wanted to kind of just go over A to Z, how we started things, how we kind of handled things in the middle, and where things are going to be left off before we depart from our services. So we met back in, I believe it was early October, and we started talking about a client service agreement between Aztec Capital Management, which is us, and Mr. Noah Vargas, which is you. We recently, or when we met, we actually listed your short-term goals and your long-term goals. So a couple of those short-term goals were you wanting to graduate from college in the spring of 2020, but you didn't have a lot of time to save, and you wanted to kind of avoid, piling debt and just kind of breaking even and just living. Your main goal was to enter the workforce roughly maybe $50,000 to $60,000 immediately after. That sounds right. And then you wanted to begin saving conservatively to pursue law school in the next 3 to 5 years. A couple of long-term goals you had told us was beyond the 5-year time horizon, you want to settle down in California, have a couple of kids, and then buy your first home, pay for your kids' college tuition and stuff like that. So after talking with the team, we had decided to settle on your most important short-term goal, which was getting yourself to law school. So with the $30,000 that you had given us to advise you on, we started with your financial standing and philosophy on your risk tolerance and stuff like that. And we decided that you had $3,000 in your Roth IRA that you hadn't really traded yet, and it was just kind of sitting there as a cash balance. You said that you understood about 20% should be allotted towards savings, but you had knowledge about various other options. You have no debt at the time of inception, but you're not able to save right now because of your current situation, is that right?
That's correct.
Okay. And you have a long-term investment preference too, with a little bit of risk tolerance since you're a little bit younger?
Yes.
So what we had decided to do after meeting with you that one day was kind of just a rough, like a rough breakdown of how we were going to do your portfolio. We decided we're going to establish an emergency fund equating to about 3 months of total living expenses, or maybe $4,000 in case of financial distress. Set up a Roth 401k and begin about 5% contributions with employer match. Just kind of see where we can get that. Adjust the Roth contributions quarterly kind of, and then go over your investor profile to determine the full scope of your risk tolerance and stocks, bonds, and ETFs that kind of match with your goals and stuff like that. We had decided that once the letter commenced and at the end of our services, you were going to pay us a hourly rate of $125 plus any additional out-of-pocket expenses and a one-time payment of the financial plan, which was $1,200. And then we also had agreed that we won't take any commission from any capital gains that you receive as well. Does that sound good?
Yes.
Cool. So right now I'm going to pass it off to my man, Austin.
I know, yeah, we're just gonna go over your investment policy statement that we had given to you to sign and you kind of looked over a couple months ago, and just make sure that a lot of those goals are still aligning with what you're doing now. So we basically in the original letter, we determined that you're in good financial standing. You don't have much debt, minimal student loans, a little bit of or good level of income to expenses with how you're structuring how you live with your budget, and we didn't determine that there was any anticipated short-term liquidity needs. You didn't need any cash right now. Has any of that changed since the last time we met at all?
No, all that still seems very correct.
Okay, cool. And there's nothing in the near future that you foresee that you need liquidity for us to know about now, so we're able to time taking any of that money that we invested out of the stock market at all?
Nothing that I can think of. No.
All right, perfect. And at the time from talking with you, we determined that your risk tolerance was pretty good. You're young, you're a finance student, so you know how the stock market works. There's ups and downs, but in general, you're okay with investing in stocks that have the potential to go down, but also have the ability to grow your money. Does that sound like what you're still looking for?
Absolutely, yes.
Perfect. So based on what we did, and just to go over to give you a bit of a recap of how we invested your money, we allocated 90% of it into some ETFs that are going to about track the market, maybe do a little bit better. Possibly, there's a chance that they do a little bit worse, but in general, they're going to stay about where the market is. So as long as the market's holding the way it is and keeps on that way, we should be looking pretty good in the future. And then we also put 10% of it into some bonds that are gonna basically have no potential to go down and lose any money for you. So they're basically just gonna hold on to that lump sum and maybe grow it a little bit, but mostly keep it at a steady level, so you don't have any risk with losing money in that. Does that sound like aligning with like your goal of, going to law school, having that money to pay for some of it?
Oh, absolutely, yes.
Perfect.
Very well.
Cool. And then, just to give you a little bit more detail on the proposed, on the stocks that we did use in the portfolio, we went with some mostly ETFs that are going to be tracking, the total stock market, ones that are going to give it a little bit of growth opportunity, one that's going to be tracking, emerging markets, like the growing marijuana market. That's going to give you some opportunity to realize some higher gains than what the whole market's doing. And then those bonds are going to be staying pretty steady with that. And then I think that's a good recap of how your portfolio was allocated, and Marty's going to go over kind of how it's been performing.
Hey Noah. So what I'm going to do here is kind of give you a recap of what happened in the last 5 weeks. So in our engagement letter, just to reiterate what Austin said, we had established that 90% would be in various ETF stocks, and then 10% would be allocated towards bonds. So throughout the 5 weeks, we never had a situation where the stocks exceeded 90%, nor did the bond value exceed 10%. So we never had to make any transactions to reallocate to make it the appropriate weights. Over the 5-week period, we tracked the returns in the portfolio. In week 1, we saw returns of 0.17%. Week 2, we saw returns of 3.16%. Week 3 saw a little bit of a drop off, less than 1%, about minus 0.71%. Week 4 saw a return of 1.54%, and then week number 5 saw a return of 0.42%. And then over the total 5 weeks, we saw a return of 0.77%. We also tracked the volatility on the portfolio. In our initial meeting, we established that if the standard deviation exceeded 12%, we would have to go ahead and reassess accordingly. And then over the 5-week period, the portfolio never exceeded more than 3%. So again, we at Asset Capital Management did not have to undergo any transactions.
So how's it going, Noah? I'm going to go over really quickly recommendations going forward. So to start out with, I kind of want to go over a brief macro analysis of kind of where we started and where we're at currently. So we may be experiencing some slowing growth that's kind of been up in the air with inversion of the yield curve, a bunch of different indicators going on that are kind of scaring the market. A couple of these indicators have been the Federal Reserve cutting interest rates 3 times in the past year. We've got another meeting actually tomorrow, December 10th through the 11th. That's going to decide whether or not the Federal Reserve decides to cut interest rates, keep them steady, or hike them. We just don't know yet. But we're waiting on that, and that's going to kind of give us further insight as to what we should do, and if we need to reallocate, then we will. As of right now, we think that the current allocation of 90% in stocks and 10% in bonds is pretty much premium for you. I know the returns seem a little low, but at the same time, we're looking at a 5-week, 5-week timeline here that we've been working with your money, so it's really short. So far, our annualized return is looking at about 8.2%, and while it's under the 10% 10-year average of the market, which index funds such as the S&P have an average return of about 10% annualized over the year, or over a 10-year period. Right now, we're at about 8.2% annualized over 1 year. So we're on track, we're earning, we're not losing money, we're not breaking even, we're going steady, because as you're well aware, you're very risk tolerant, but we don't want to be so risk tolerant to the point that we're just like gambling in Vegas, willing to lose it all, it's not a good idea. So we want you to have some money for your education, and some is definitely better than none. So we think that we're on track. The meeting tomorrow will help us decide whether or not we need to reallocate more towards bonds. These interest rate cuts, they actually increase the yields on bonds and decrease the value of stocks. But right now we're also in a big bull market, it's in a big run, so there's a lot of opportunity within the stocks. So we think that they've got a lot of room to climb and are going to continue to basically be earning you really solid positive returns. And that's basically my recommendations going forward, is that we keep it the same, continue to monitor, and going forward, especially after tomorrow's meeting, we can kind of get more insight as to what we should do.
Good.
Alrighty, very nice.
Cool, I think we're all set. Thanks for coming in, Noah.
Yeah, it was good to see you
Hopefully
guys.
see you
Appreciate your
in
time.
a
Thanks for all
couple
the
weeks.
help, I appreciate help with my investments, I couldn't have done it without you guys.
Of course,
Thank you.
thank you for trusting us.